Now, there are a lot of different indicators, a lot of different patterns, a lot of different strategies which you can use in the stock market. But in this video, we are going to talk about one of the most simplest or one of the most effective swing trading strategies which you can use while trading as a beginner. Now, this particular pattern is actually called as triangle pattern, and it's actually spoken by Vijay Kedia, who is one of the top 10 traders in India. Now, I have been personally using this pattern over the last 1.5 years, and I've actually seen great result. This pattern I actually learned from YouTube from a channel name as Madras Trader, and I think his videos have been very useful and very helpful to understand this particular pattern. So first, we'll actually understand the logic behind this pattern, and then we'll go through multiple different charts to understand how these patterns have been used in the real market and give you proper real examples. Now, let's first actually understand the concept of how the triangle pattern is actually formed. Now, let's say a stock is currently trending at maybe about 200 rupees. So it starts going upwards. Let's say it reaches around 280 rupees. Now, at this particular point, the sellers who are there in the market, they think, you know what, the stock is already too high, and they will start selling the stock. Now, what happens when people sell the stock? The demand of the stock automatically comes downwards. When the demand comes down, automatically what happens? The price of the stock also comes down. So you will actually see the price of stock coming downwards. So it from 280, it might start coming down to, let's say, about 220. Now, at this particular stage, the buyers who are there in the market, they will think, you know what, the price of stock is actually quite good right now, and they will start buying the stock. Now, when people start buying the stock, what happens is that the demand of the stock starts going upwards. And when the demand starts going up, automatically the price of stock also starts going up. Now, from here, you will see the price of stock actually going upwards. Now, over here, let's listen to this part very carefully, right? Now, over here, the sellers who are there in the market, they become more aggressive. They might come across some multiple news and everything, and they become more aggressive, and they will not wait till 280, which was the previous point, to actually start selling the stock. So probably around 260 level, they will start selling the stock. So from here, you might see the stock price again coming downwards. And similarly, once it comes down, the buyers who are there in the market, they also become more aggressive. They probably might not wait till the 220 level. Probably around 230 or 240, they will start buying the stock, and automatically the demand of the stock starts going upwards. So this keeps happening. So sellers become more aggressive now, and then it starts coming down, and then the buyers become more aggressive and starts going up. And this keeps happening, let's say, a couple of times. So if you now see, if you actually draw a trend line on it, right? So if you're able to connect these lines, you will see a triangle getting formed. So you start seeing a triangle forming, and this particular pattern, let's say, it keeps continuing. In the end, finally, only one side can win. Either the buyer's side will win or the seller's side will win. Only one side can finally win. Now, we as a retail investors, we do not know which side will win. So our goal should never be to enter into a position when this particular triangle pattern is getting formed, because we do not know which side is going to win. But finally, there will be a breakout where one side wins. Now, when the breakout actually happens, either the buyer's side will win and the stock will just shoot up over here, or the seller's side will win and the stock from here will just shoot downwards. So this is where we have to take our position. Now, when the breakout actually happens, you'll see a strong momentum. So from the buyer's side, let's say the stock just goes upwards. And the reason why there's a strong momentum is because till this particular pattern is there, you have buyers and sellers. Now, once the breakout actually happens, and let's say the buyer's side actually win, now the sellers who have been there in the market, who have been selling the stock, who have been shorting the stock, they also become buyers, right? So you have more people buying the stock, and automatically there are more demand for the stock. So the price of stock just shoots up. And similarly, let's say the sellers actually win, instead of buyers, the sellers win, and then the price are shooting downwards, is because till now you had buyers in the market, but as soon as the breakout happens and the stock starts going downwards, in that case, the buyers who are there in the market, they also become sellers. And automatically, there are more people selling the stock. So the demand of the stock just goes downwards. And when the demand goes down, the stock price also goes down. And you will see instantly the stock price just shooting downwards. So this is where we need to take a position, because we need to wait to understand which side the breakout is actually happening. whether it's on the buyer's side or on the seller's side, and accordingly we'll take a position. Now we need to understand when the breakout actually happens, when to enter, when to exit, and where to keep actually stop loss, because that is very important. We need to understand these basic parameters before actually taking the trade. So looking over here, let's say the buyer's side actually went and the stock just shoots upwards, right? So in this case, we will be taking a position in this particular area where the breakout actually happens. So above the triangles, when the breakout is actually confirmed and you see the price of stock going above the particular trend line which you have actually drawn, so in that case, we will be taking a position over there. Our stop loss will actually be below the triangle, right? And finally, in terms of how much potential return can you expect, I usually aim for at least 5 to 7% when I'm taking a particular trading position in this breakout cases, because I know at least 5 to 6% can easily be met. There are cases where the stock can just shoot up and go maybe 12%, 15%, and even 20% in some cases. I personally do not wait for that particular return purely because the stock can drop as well. So my goal is to at least take 5 to 7% and then look for the next position. And similarly, let's say the seller side went and the stock just goes downwards. In that case, your buying position will be right below the triangle and your stop loss will be kept right above the triangle, similar to how the other position was, but just on the opposite side. Now, if you're someone who is not comfortable with shorting of the stock, I would highly recommend not to start shorting, because shorting involves much higher risk as compared to your normal positional trades. Now we'll actually go through different charts to actually understand how this pattern is actually formed in the real market. Now what I want you to do is, whenever I'm opening any chart, I want you to pause the video and then I want you to actually analyze if you are able to see the pattern yourself. So we're going to understand at least 6 charts. I want you to actually comment in the comment section, out of these 6 charts, how many times were you able to analyze the pattern yourself. So don't cheat. Whenever I'm opening any chart, you pause the video, you actually try and find the pattern yourself, and then you continue watching the video. So this is the first chart. So let's actually understand where is the triangle pattern actually forming. So if you over here, if you see, if you draw a triangle over here, see, so you have one meeting point, you have 2 meeting points, and similarly, if you draw a trend line over here from down as well, from here and here, so you have 2 meeting points over here as well. After that is done, you have a beautiful breakout from here, right? So over here, the candlestick actually breaks the triangle pattern, and then you have a small breakout, and then immediately after that you have a huge breakout. So the kind of return which you can expect is from here, if you see, 5 to 6% in the first day, and if you actually continue holding the stock, in that case you are able to get at least 10% return easily, and the stock is still going up. So a 5% or a 6% easily is something which you can expect, right? So if you enter somewhere over here, at least a 5% return you are able to get within a 2 or 3 days time frame. Now this is the second chart. Now when you are analyzing patterns in swing trading, you need to look at least from a daily chart or a weekly chart or at least a 3-hour chart. So these are the 3 different charts or 3 different time frames that you need to look to understand if there is any pattern actually forming. So in this case, this is a daily time frame. Now let's actually understand in this case, where does a breakout happen? So if you see from here, if you actually can draw a triangle, and here as well, right? The straight line, and this is a triangle. So in most cases, you will not get exact triangle frame, or you will not get an exact triangle where, at the end, the breakout happens. It's not necessary. A breakout can happen before the main tip of the triangle as well. So this is something which you need to understand. You need to keep checking probably every single day or every second day, or you need to actually set an alarm in terms of, at this particular stage when the triangle pattern actually breaks, there's an alarm which comes for you. So over here, the triangle pattern actually breaks and there's a breakout over here. So the kind of potential return which you get from here is easily, like I mentioned, 8% till now. So if you have a goal of at least 5% to 7%, you're easily able to make a return from this. Now this is a third chart. Now over here, let's actually understand where is the triangle pattern actually getting formed. Now, if you draw a trend line from here connecting these 3 particular points, and if you draw a trend line at the bottom as well connecting these points, So you have multiple points where the candlesticks are actually hitting the trend line, and similarly at the support level as well, you have multiple points. So automatically over here, you see the small breakout happening, and immediately after the breakout actually happens, you see the stock price is shooting upwards. So the kind of return which you can expect or which you could have got was easily about 11%. So like I mentioned, 5% to 7%, easily something which you can expect when a breakout actually happens. Now this is a fourth chart. Now in this case, the breakout just happened recently. So if you actually see over here, you have a beautiful triangle which is getting formed here. And then finally, the breakout just happened about 2 or 3 days ago before this video is being created, right? And a breakout happens, and then if you're able to take a position over here, then after a couple of days, we are able to understand if we are able to take a profit or not. So in each of these cases, like I had mentioned before, you take position only after the breakout happens, and your stop loss will always be below the triangle. Now this is the fifth chart. So over here, again, you can actually see there's a beautiful breakout which just happened recently. So if you're able to connect these lines over here, and if you're able to draw a trend line from here as well at the bottom, so you can see there was a breakout which just happened, and immediately after the breakout, the stock just shoots up. If you're able to take a position somewhere on this particular area, you're able to start making a profit of at least 5 to 7%. And similarly, like I said before, your stop loss or your point of exit or your stop loss will be right below the triangle. And now finally looking at the last particular chart. So over here as well, if you actually see, you are able to draw a trend line here, and you are able to actually draw a trend here as well, right? So multiple places where the points are actually touching the trend line, and similarly at the support level as well, you have multiple different areas where it's actually touching the trend line, and then you have a beautiful breakout which happens. And like I had mentioned before, right, if you take a position, you're easily able to take about 5% to 6%. In this case, you're able to take at least a 5.1% profit within just a few days itself. So I do hope you were able to understand what triangle pattern is, what is the concept behind triangle pattern, and how to actually understand triangle pattern in the real market. Now, this is one of the most easiest and one of the most simplest trading strategies which you can use as a beginner when you just start trading. Now, whether you are a college student or whether you are someone who is working and you do not have enough time to spend on the market, you can actually spend less than 5 minutes a day in these stocks to actually see if the triangle pattern is being formed, and if yes, you can actually keep them in your radar and take a position accordingly. So I do hope you have actually got some value from this particular video. If you have any further doubts in terms of understanding what triangle pattern is, feel free to drop me a message on my Instagram. I'll be more than happy to help you out. And if you found this particular video useful, do like it, do subscribe, and I'll see you all in the next video.